Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets today? Well, we're having kind of a mixed day. Dow's down about 150, Nasdaq's up a little bit. So nothing really all that extravagant after yesterday's big drop. Now what happened? Well, we were sitting at the support level right around 39.50 on the S&P, and we bounced off that up almost to 4,100 before we had that big drop yesterday. Now we're back down under 4,000, and we're sitting at support level again. Now you see, now it's going to eventually break to the downside, but we may get another bounce up. We're sitting right on, well, the 50-week moving average for the S&P, and that is a strong support level. Once we get below that, it's going to come down. It'll come down. The next support level is probably around 3,600, and once it takes that out, we'll be down around 3,400. We're going to take out those October lows. At least that's my take on the market. That's my prediction. Now, I do think the February high is going to hold. Even if we get another bounce up, they may take another run at that 4,100 level, because we are sitting on that support, and we could bounce off it one more time before we break down through it. We got Jerome Powell. He's talking to Congress today. I mean, it's fascinating. He's going to save the world. Nothing to worry about. Anyways, it's on right now, and I was listening to it, and it's kind of funny. You know, I never knew the Fed, their job. They got a big job. They're going to fix the war in the Ukraine. They're going to fix climate change. They're going to save the housing market. They do a lot of stuff, and the only thing they really do is create more money out of thin air. That's their job, but apparently that's going to solve a lot of problems. Okay, so let's get over to the housing market. Now, the housing market, we've had a drop of about 13%. Now, a lot of people think this is it. They think we're bottoming out here and we're going to go higher. They think 13% drop is enough. Well, look, we went up 40% just in the last couple of years, about 20% a year, Some areas they doubled in prices, but we've come down about 13%. And a lot of the economists that, in the real estate market, well, they're saying that we're going to bottom out here and we're going to get this housing rebound. Now, I don't see it that way. I see it coming down a lot more. Look for the last 4 weeks, mortgage rates have gone up. We're now over 7%. And that's if you have a good credit score. You got a bad credit score, we're up over 8%. And the Fed, they're going to continue to raise. Jerome's out there talking right now, saying they're going to raise up to 5%. We're there now. We're going to get up to 6%, right? And we may even go a little bit higher than that. Well, eventually it's all going to break and it's all going to come down. There's a lot of black swans out there that are circling right now. And you see, that's what I want to talk today, how everything is kind of interconnected. Everything is tied together. Now, right now, the car market there's a subprime market out there, right? Okay, there's negative equity in this car market. People have, they go to trade in their cars and they're 5 to 10,000 negative equity. They go, yeah, give us 10,000, we'll take the car off your hands. So the car market's getting a lot of repossessions. The defaults are spiking like crazy in the subprime of the car market. It's 1 out of every 4 is over 30 days late on their car payment. So the repossessions are there. Now this leads the housing market, right? The car market is starting to go down, and 6 to 9 months later, you're going to see a lot of pressure on the housing market. It's all interconnected. You see, there's the paper. The paper's the problem. It's not the cars that's the problem. It's the paper, the loans. These loans were sold to the banks and sold to Wall Street and sold to the pension funds. And now 1 out of 4 are defaulting on these loans. And these are high interest paying loans, so people were expecting to get paid. Well, they're not going to get paid. Now, maybe the government comes in and bails out. Now, let's go talk about another black swan that's circling right now that's interconnected to the housing market, and that's the commercial end. The commercial side of things is starting to come down. Now, the housing market, we're down about 13%, but on the commercial end, we're down over 20% already. Now, commercial are things like office buildings. Remember, everybody's working from home now. So these office buildings, well, they're not as full as they used to be. People don't go into the office that much, so they don't need as much office space. Now, I had dinner with my accountant the other night, and it's fascinating because he's got a lot of commercial clients. And these commercial clients, they don't have 30-year loans. They don't have 30-year money. They have 3-year money or 5-year money now. It's all fine when the rates were low, but now they have to refinance. And it's hard to refinance a building that's half full. So what's happening? Well, we're getting these defaults. These commercial mortgage-backed securities are defaulting. Now, there's been a couple of companies. One company, Columbia Property Trust. Now, they're a PIMCO-owned company, right? Well, they defaulted on commercial mortgage-backed securities, $1.7 billion default. Now, that's bad, right? 1.7 billion, not million, 1.7 billion, they defaulted, because they couldn't get the refinancing in place, right? They had 3%, now it's up at 7%. Actually, on commercial, it's a little higher, probably up at 8%. But it's hard to refinance these projects. These big skyscrapers are shopping malls. Shopping malls are down about 25% already. 1 out of every 3 tenants is not paying the full value of the rent. Some of them are paying half their rent because that's all they can afford to pay. They don't have money. So the shopping malls are not getting the income that they pay on the mortgage. Well, they're mortgage-backed security, right? It's a commercial mortgage-backed security, and the landlords aren't getting the rents from the tenants, so they can't pay on their loans. So these loans are going into default. Now, there's a fascinating one that's been in the news a lot, and that'd be Blackstone. You see, they got that $67 billion. Well, it's a $67 billion fund, right? Well, they're not giving the people the money back. Now, these are very wealthy people. This is not a publicly traded fund. You have to be an accredited investor. You have to be a millionaire or multi-millionaire just to invest with them, right? But here's the thing. So it's a $67 billion fund. $12 billion came out of it in 2022. But they had to stop withdrawals now because everybody wants their money back. And it's just crashing the market there in the commercial mortgage-backed security market. So that's this black swan that's going around. But don't feel too bad for Blackstone. Their CEO, he made $1 billion in 2022. That's how much he got paid with his dividends. So he's not doing too bad. That's where a lot of the money went, was to the CEO. But the fund is doing terrible because you can't get your money out of it. So they got a lot of angry rich people that want to take their money out of this fund. Well, what'd the fund do? Well, they had to sell their interest in Mandalay Bay in Las Vegas to raise some money to help support the withdrawals. This is just what's going on, right? But they're defaulting. They just defaulted on $562 million project. Now, that was in Europe, I believe, and not in the United States, but they're defaulting on these commercial mortgage-backed securities everywhere. Well, who owns the paper on this? Who's going to take over these projects? Well, it could be you. Look at, if you have a pension fund, a lot of the pension funds own this paper, and when they're not paying, the pension funds don't get paid, right? So the pension funds are in trouble. That's another black swan that's just circling up above, right? So these pension funds, they need the stock market to boom, and they need it to boom a lot. They've been underfunded for so many years right now because they can't get any return on their money. The Federal Reserve held interest rates at 0%. They need to get 7%. Where do you get that kind of yield? Well, you go into the risky car loan business. You go into the commercial mortgage-backed security business. So they're the ones that are holding the paper on these. So what happens when these pension funds go under? This is all interconnected. You think it doesn't pertain to the housing market? You bring the commercial market down, the housing market's going to come down with it. As a matter of fact, commercial would be, that would be apartment buildings, apartment owners. The rents are starting to come down. Prices are starting to come down on these apartments, over 20% down already. Why? Well, because the mortgage rates that they have to pay, just like when you buy a house. They have big loans. Their loans are tens, hundreds of millions of dollars in these loans, and they come up for refinancing. Let's call it every 5 years, right? Well, these projects, okay, the rents have come down, and some tenants still are not paying the rent. I know that's shocking, but a lot of tenants, a lot of them, millions of them, aren't paying their rent to the landlord. So the landlord doesn't have all this income to pay for his loan, right? So these commercial mortgage-backed securities are in trouble. Once again, a lot of these are owned by the pension funds, and this could bring the whole economy to a standstill. Of course, we got the Fed Chairman Powell. He's saying it's not a problem. You can go listen to him. He's talking right now. He'll tell you this isn't a problem. Look, the government's got your back. They're going to pay for all of this. Oh, that's great news, isn't it? You and me, the taxpayer, we get stuck with the bill. But there's a lot of things out there besides just the interest rates. Now we're back above 7%. You see, now the realtor, they'll tell you, go out there, buy a house right now, and then in summertime, when the rates are back to 3 or 4%, you can refinance and get rid of that 7 or 8% mortgage that you're buying with right now. I don't see it that way. I see rates going up. I think we're going to hit above 8% on the mortgage, and I think if you have bad credit, you're going to get up to that 10% level. That 10% is, you're not going to be buying a lot of houses. A lot of houses are not going to be sold. We're coming into the spring selling season, right, where all the houses get sold. You get the mortgage rate up at 8, 9, 10%. The buyers are going to just non-existent, but that's where all the inventory starts to come onto the marketplace. Now, of course, in your area, nobody sells, and I get that because, you live in a great area. Other areas, the sellers don't want to sell right now because they can't get what Billy Bob got. Well, I'm telling you, they're not going to ever see those Billy Bob prices again for the next decade. It's coming down, and it's not going to bounce this time. It's not going to bounce. Now, they're going to print a lot of money. Jerome will tell you they're going to print the money. He's going to back it all, man. If there's a recession coming, they're going to fire up that printing press, man. They're just going to get the money out there to the people that need it, and the people that need it will be those corporations. It won't be you and me. We'll be the one paying the bill. It's funny how that all works, right? But anyways, this housing market is so fragile when you get these rates above 7%. You get the rates above 8%. You got these HELOC loans, home equity line of credit, which are approaching 10% right now. That's a new way to refinance because nobody's refinancing, but they need money to live because inflation is out of control. Once again, don't worry. Jerome says he's got that all under control, that it's going to come down. I'm telling you, there's a second wave right now, and they're going to feel that second wave. I don't think inflation's coming down yet, but Jerome tells you it's all under control. I was just listening to him. That guy's so smart. I'm glad he's in charge, aren't you? Oh, I'm Tall Mike. If you like this stuff, give me the thumbs up. Why not? Get out there, everybody. Have a great day, and hit that subscribe button so I can talk more later in the week, and we'll see what this market does. Bye-bye now.